Welcome to Chapter 3, Exchange Basics. In this chapter, we're going to be going over how to set up an exchange account. We're going to be looking at how to fund your exchange account, and we're also going to be covering what is spot versus leverage. So let's jump right in. So first and foremost, you're going to want to understand which exchange you are actually able to use. This is going to be dependent on your location. The main exchanges are going to be Coinbase, Binance, Bybit, Blowfin, and BitGet. So I myself am from Canada, so I'm going to be using BitGet. So I've gone to bitget.com. I'm going to go to sign up. Once you go here, you're going to want to put in your email and your password, and then you're going to want to create an account. From there, you'll be able to sign in, and you'll receive a verification in your email. Once you create the account, take that, put it in, and you'll be in. So now you've actually created your account. So next step that you're going to want to do is you're going to have to verify your identity. So you're going to want to click on wherever that shows on the exchange, and you're going to verify your identity. You're going to send in a photo of your ID. Typically, you're going to fill out some personal information, and they're going to verify that it is actually you who has opened the account. Now, this is going to allow you to do withdrawals. This is going to allow you to deposit money, and this is going to allow you to trade. If you don't want to do KYC, then I suggest you use Blowfin, as that is a non-KYC exchange. Otherwise, typically you're going to have to go through this process. Once you've gone through this and you've verified your identity, you now have your account set up, and the next step is going to be to actually fund the account with money so that you can trade. So what I suggest, dependent on what exchange you signed up for and your location, there's going to be a number of different ways that you can fund your account, and they will all be different depending on those two things. So I've gone and Googled how to fund my BitGet account in Canada. This is going to give me a number of options, and it'll be different for everybody. So we have a few crypto deposits. If you have an on-chain wallet, say like MetaMask or something similar, where you have stable coins, USDT or USDC, or you have things like Sol, Bitcoin, ETH, things like that, you will be able to deposit those into your exchange, and you can use those to trade if you'd like. Other methods will be things like bank transfers from your bank account, or you can also most times pay from a debit or a credit card to actually fund the account as well. Again, it will be different depending on your location and depending on the exchange that you actually use. So now you have your exchange set up and you have funded your account. We're going to look at the two different ways that you can actually trade on the account. We have spot trading and we have futures or leverage trading. So let's take a look. Inside of your exchange, there will be somewhere that says spot and somewhere that says futures, which again is just leverage. So let's take a look at spot first. So spot is going to be your entryway into the crypto world. It means you're buying an actual crypto asset using your own funds with no borrowing and no added risk. You simply buy and own the coin, and you're not speculating on the price movement using borrowed money like in leverage, which I'll explain after this. You own the asset outright. Spot trading is the perfect type of trading for beginners because there is no liquidation risk. If the price drops, you still own the asset and can hold it long term. So with spot, if you buy an asset and it rises in price by 10%, your investment will go up by 10%. If you buy an investment and it goes down by 10%, you will lose 10% of that investment, but you're still holding the asset, you're still holding the coins. That's the fundamental difference between spot and leverage, which I'll cover next. This is what the actual spot interface will look like, and it'll vary slightly from exchange to exchange. I'm not going to show you how to open a trade right now on spot and leverage. I will show you that in chapter 4. For now, we're just going to understand the difference between spot and leverage. So again, now we're going to go to futures and we're going to take a look at leverage, which is the second way you can trade. So trading leverage is for advanced traders. If you are new to trading, it is not recommended to trade with leverage. Stick with spot and you will have a much smoother journey into trading. So leverage trading is where things get more time intensive, they get a little trickier, but the potential rewards and loss are also greater. So with leverage, you're borrowing capital to open larger positions than your standard spot trading account normally allows. Like I said, this amplifies both your profits and your losses. So for example, exchanges will typically have anywhere from 1 to 100x leverage, and depending on the asset, sometimes only offer 20, 50, things like that. If you're new and you're going to use leverage, I highly suggest, and Wealth Group suggests this as well, just stick to 10x leverage. So what is leverage? I'll show you here. It's actually a slider that the exchange will have, which will give you different leverage amounts. Now, like I said, this is for more advanced traders. Only stick to spot if you don't know what you're doing. An example of how leverage works. With 10x leverage, if I were to buy $1,000 worth of Bitcoin on 10x, I would own $10,000 of the asset. Some platforms, like I said, go as high as 100x, but remember, this is not free money. If the market moves against your position too much, you can be liquidated, meaning your position is forcibly closed and the margin you used on that trade is lost. So you're playing with borrowed money, leveraged money, and that's where things become trickier. And that's where people lose a lot of money in crypto, especially the ones who are not experienced with this. So in Wealth Group, we use leverage with precise setups and extreme risk management. Many traders will use 2-3x leverage for longer term swing trades, and many will use 10 to 20x leverage for faster scalps, typically on lower time frames. Again, this is a tool that has varying use cases, but it is for advanced traders. So this is the fundamental difference between spot and leverage. Understanding what's right for you is important. Spot is slow and steady. It's about building your wealth over time with lower risk. It's best for beginners or anyone looking to invest long term. Leverage is fast and aggressive. It requires technical skill, discipline, and consistent monitoring. Better for advanced traders who understand risk and can handle fast decisions. So many in Wealth Group start with spot in order to build their confidence, to learn how to trade, to understand the fundamentals of it. Then they layer in leverage as a tool as they get more experience. And this is the smart way to do it. So this is going to wrap up chapter 3. We've gone over how to set up an account with an exchange. We went over how you can fund your account on that exchange. And we went over the 2 different ways that you can actually trade once you have those funds in there, spot and leverage. In chapter 4, I'm going to show you what the actual setup inside of Wealth Group Discord looks like, the actual community, and how you can understand leverage trades and spot trades inside of there, and then take those onto the accounts that we just set up and actually execute those trades.